Good afternoon, everyone. I'm CS Swati Panchal, moderator of this webinar. And we are delighted to welcome all you in this webinar being organized by CP of ICAI. And it's my pleasure to be moderator for these sessions of webinar on current issues under GST refunds and overview of various textile policies. In a short while, we will start this webinar, and I would like to appraise you about the CP committee. The increasing globalizations, continuing development in the field of finance, and frequent changes in the world economic order have posed numerous challenges before the accounting profession worldwide. These challenges have significant implications on the growth and development of our profession and simultaneously have more expectations from the profession. It is indeed the responsibility of the professional bodies to provide members with adequate facilities and opportunities to meet the challenges thrown by the dynamic environments. So at the CP committee, we have organized such sessions, and today we have two sessions: the current issues under GST refunds in context of cross-border transactions and overview of various textile policies. Our eminent speakers has already joined, and it has perfectly set the tone. So first, let me introduce Chairman of CP Committee, CA Gyan Chandra Misra ji. He's the Vice Chairman, CP Committee, and Chairman Committee on Insolvency and Bankruptcy of ICAI. Presently, he is serving the Institute of Chartered Accountants of India as a Central Council member and convener at Tender Monitoring Directorate of ICAI. He has more than 24 years of professional standing to his credit as an established CA. Under his vision, this year CP committee taking new initiatives for the members. Thank you so much, sir. And with these words, I'd like to welcome you.
So thank you, Swati, moderator of today's program. My good friend and of course, chairman of the committee, C.A. Purushottam Khandelwal ji, very learned speaker on GST, Abhishek Chopra ji, and of course, G.B. Modi ji, secretary of the committee, Ajita Tiwari ji, another moderator of the next session, C.A. Bharbosa ji, and very respected all the participants. Good afternoon to one and all. Friends, we all know that on every Wednesday, 3 to 5 is the time to learn from CP committee, and so is today as well. We all know that the robust changes in any industry are being discussed. Not only the just learning, but development of the skill sets, how to plan best for the career, and of course the soft skills also being discussed in the programs of CPE committee. Friends, today's program is very interesting, and I'm sure that both the learned speakers will deliberate to the best of their knowledge and wisdom. And GST, of course, refund, one of the area which is always close to the heart of the chartered accountants, shall be deliberated by Abhishek ji, and policies with respect to the textile industries shall be deliberated by CAGB Modi ji. I'm sure that this is going to be a huge learning session for all of us. Keep connected to CP committee. Since Chairman sir is here, I will not take much time. I'll request the moderator to kindly proceed with the program. So thank you very much.
Thank you so much, sir, for enlightening us. I here request Vaibhav Shah to introduce and our chairman, sir, C.A. Purushottam Khandelwal ji.
Babuji, you are mute. Babuji, you are mute.
Sorry, it happens sometimes.
Yeah, please.
Thank you so much, Swati, for the warm beginning of this event. By the way, there can't be a better feeling than to introduce our very own ever energetic PK sir. By the way, he is the person who don't need any introduction, but as a formality, let me do that. Purushottam sir, he is the chairman of this CPEC committee. He is also the vice chairman at CMP and Career Counseling Committee of the ICAI. He is also the deputy convener of the Union Directorate. So far as his practice is concerned, he is having 25 years post-qualification experience in the field of audit, direct tax, indirect tax, and also IPR. Normally, we CAs are not into that field. This year, he is devoted to fortifying CP framework and guaranteeing quality across its entire operational spectrum. And this year, major focus would be on upgrading of CP portal and mobile app for enhancement of the branding and professional competency of the members. So with these words, I would like to invite Purushottam sir for the welcome address.
Good afternoon, respected Vice Chairman of this committee, Gyanchand Mishra ji, my dear friends, two learned speaker, Abhishek Chopra ji from Ahmedabad, GB Modi ji from Dhule, two moderator from our own city, Swati Panchal and Vaibhav Shah, architect of this program, Ajit Naji Tiwari. As we have decided, the Wednesday would be learning day. So Gyanji rightly said, every Wednesday we are organizing a CP program of the profession relevance. This year, my committee is dedicated to use the technology in the CP committee. We are coming soon with the mobile app where the attendance will be marked by OTP of the mobile. So the days are not far away that the signature process will be gone away from the CP committee. And this year, the rolling period of 3 years is also not more there. And you have to do your CP program once in a calendar year. So this is the major changes. Apart from that, we have decided to meet the CP study chapter convener, deputy convener at every city and every state. So we can appraise them how we upgrade the knowledge of the members and what is the professional relevance topic is important, because today we have selected this topic for GST refund for cross-border transaction. And this is effect to each and every chartered accountant, those who are doing practice in the GST. Vaibhav is also doing in the GST practice, and Abhishek ji is also expert in the GST. Even though Vaibhav is a very good speaker, but today he's got just as a moderator. Next time you will also get chance to address the members, and Swati is a very good speaker. So this is a very important topic, and our intention is how we appraise members, how to get the refund without hassles free, because the department is harassing. I am aware that I am in the main of public life, so I got call from the members that they are not get refund without satisfaction of the officers. So this is one of the big problems. We take these problems to the central level also. And another topic we have selected is the textile policy of the government of India. So GB Modi sir is the main, those who are practicing in the only subsidy across the country. So they will compare it with the GB textile policy as India as well as the Maharashtra. So both the topic is very relevant, and I'm sure that the member will be benefited by this seminar. Thank you so much. I will not take much of a time because the member coming here to listen the Abhishek ji. But before the Abhishek ji start, I am request Ajit sir to make a portal available that the unstructured CP will be automatically credited to the member account, those who are attending this virtual seminar. So they have not to fill up the form and sign and declaration. So that will be major advantage for members, those who are attending the virtual seminar. Thank you so much.
Thank you so much, sir, for setting the perfect tone for the webinar. Now, it is indeed a pleasure for me to introduce our today's faculty, Chopra Sahab. I mean, out of love and respect for his deep GST and customs knowledge, we call him Chopra Sahab. He has a deep experience of more than 15 years in the field of indirect taxation. And when I'm saying indirect tax, I mean GST as well as customs. He possesses deep understanding of the GST framework, its implementations, and the practical challenges faced by the businesses in complying the same. He has also delivered lectures to several professionals and trade associations apart from this platform. He was also a co-chairman of the IDT committee of Ahmedabad branch in year 2020-21. He was also nominated as an expert in indirect tax force of Gujarat Chamber of Commerce. So this was just a very short introduction of Chopra Sahab. With this, sir, the floor is all yours. Now it's up to you.
Thank you, Vaibhav. Thank you very much. Good afternoon, everyone. It's an honor and privilege, always an honor and privilege to be a speaker or a lecture, that too on GST, hosted by CP Committee of ICAI Delhi, under the dynamic leadership of our beloved Shri Purushottam Khandelwal sir and Shri Gyanchand Mishra sir. I express my sincere appreciation to my co-speaker for the today lecture, Shri GP Modi sir, and to the two moderators, both from Ahmedabad, CS Swati Panchal and CS Vaibhav Shah. With these words, I want to start today's session, and I am sharing my screen. next month, as we all know, GST is implemented with effect from 1st July 2017. A magical date, everyone remember it. Now, next month, it is going to complete 6 years. In 6 years, many new provisions have come. This is the new, I will say, it has changed the shape of economy. And to wrap up the GST refund issue for 6 years in 15 minutes is quite difficult. So what we will do is, today we will take the GST issues on refund with related to cross-border transaction. When it comes to cross-border transaction, I means we will discuss the issue related to GST on refund with regards to export of goods or import of goods. So nature of procurement will decide nature of refunds. This is the basic theme of this today's seminar. So I assume most of us are doing GST, having basic knowledge of GST. They know the basic understanding of GST. So we will not touch upon the basic things of GST. We know the procedure of filing returns. We know the procedures of claiming refunds, filing forms, everything. But today what we will discuss is legal issues surrounding GST refunds. So first understand from the basics what cross-border transaction means. So under GST, there is a concept called export of goods, which is coming under zero trade supply. And to export the goods, the company or the exporter may have to buy the goods, and that can be the import of goods. And we will discuss the export refund claimed by exporter, who has also imported the goods, claiming certain exemptions, and which are subject to various amendments from time to time. And what is the current issue they have faced? What is the legal provision, legal amendments which is being made by the government from time to time? What is the way forward? What is the legal remedy available to them? This is the basic agenda of today's meeting. So what we will discuss, to whom it is relevant is those who has claimed the GST refund from government on exports with payment of IGST. So there are, you can see on the screen, there are 3 dates that I have mentioned. Why this date is relevant, we will discuss in the subsequent slide. But this is the date which need to be kept in mind while discussing these slides, while discussing this topic. So 23/10/2017 is the beginning of the era whereby the exporters can claim the refund based on nature of procurement, that is import. So with this, we will discuss what happens 23/10/2017, what happened on 8 October 2018, what is pre-import condition, and what is the future of import and exports. So why export and import is important, we need to understand in this perspective also. Export are the backbone of the country. If any economy, not like India, it is backbone of any economy, any growing economy. And whatever provisions, whatever policy comes, it is made for the best benefit of the exporters. Government try to implement that policy, give that environment whereby exporter can compete in the international market. It should not face any issues, any cost competitiveness on account of domestic policy or government policy. Same provisions was there in the erstwhile law, and government had also made such provision in the GST law also. While making this law, as we know, this is the new law, many issues have cropped up, which we will discuss in the subsequent slides. So this is the background. With this, we will start with what is import first. So we have a commonly understood that import means bringing goods in India from a place outside India. So what generally happens is, if a person want to export any goods, he will manufacture in India, or he will purchase locally from India. Then he will export it. So there is one more procurement method, that is for manufacturing any finished goods, he can follow the route of import. So to bring the goods from out of India to a place in India, there is a 2 route possible. One is with payment of IGST. When he import the goods, he will file bill of entry and he will pay integrated tax at a time of import based on the valuation as filed in the bill of entry. Along with integrated tax, he will pay basic custom duty also, says also, but since our topic is restricted to GST, so I will take integrated tax only, the relevance of integrated tax. Alternatively, the said goods can be imported without payment of duty, that is IGST, under advance authorization scheme. So this is the exemption, this is the mechanism which is given by the government for all those exporters who's intended to manufacture the goods, imported goods, or ultimately for the purpose of export. So we should keep in mind that there are two methods whereby we can export the goods, import the goods, that is with payment of IGST, and second is alternative by claiming an exemption under advance authorization. What is advance authorization? We will discuss in next slide. Second is, once the goods is imported, manufactured, and then exported, there are two methods whereby we can export the goods under GST. First is under letter of undertaking. Under this, the exporter export the goods without payment of IGST. The tax paid on purchase is accumulated at ITC. He export without payment of IGST on outward supply, and he claim the refund of accumulated ITC for such export. Alternatively, he can make payment of IGST on the export the goods, file the shipping bill, file the monthly 1 and 3B, pay the taxes, and claim the refund. The refund will directly credited to his bank account. So with payment of IGST is automated route of refund, we can say. This is paperless refund. The exporter just need to file the shipping bill, file the returns, and they will get the refund like drawback is coming in the SY regime. So it is, I will say it is very automated and smooth refund, paperless refund. Most of the exporters have opted for this. Now, when we say export and import, so total three formation are coming into picture. So most of us knows the GST. We know the GST, we know the CBIC, we know the notification coming into that. But being a practitioner, we should be through with these two formation also, because under GST, all the export and import are governed by precisely Customs Act, and the incentives are coming from DGFT. So what DGFT generally do in context of our topic, DGFT issue advanced authorization. This is a license. You can assume it is a license which is given to import a goods which is desired by the exporter to import without payment of duty, that is raw material. So importer who wish to export the goods can import duty-free raw material from a place outside India without payment of IGST and basic custom duty. With this license, this is issued by DGFT. Now DGFT license issued to importer will go to customs. Custom at a time of bill of entry, that is importation, the exporter shall submit this advance authorization license. Based on that license number, the exemption will be granted to importer. That time he can take the exemption of IGST and basic custom duty. Then that goods will be received by him in his manufacturing place, maybe his factory or godowns, wherever, and he will manufacture and export the goods, finished goods. At the time of export, he can either do LUT or he can do IGST paid export by filing the returns. So you can see from this is not just GST who is concerned about the import transaction. It is DGFT who is issuing authority, is the custom who is exemption granting authority, and it is the GST who is refund granting authority. So there are two departments apart from GST also. So how this works, how this whole process works. Suppose there is an exporter A Limited. A Limited want to export some goods. They have some orders. So they know that this goods is not available in India or maybe available in India. It is cheaper in case of importation. Considering this commercial call, taking this commercial call, he will approach the DGFT. He will take advance authorization script license and he will go to the custom. The custom at the time of importation grant him the exemption from basic custom duty and IGST. He has a choice to claim either exemption of BCD, IGST or both. Generally, importer choose both. Then this advance authorization holder, alternatively, apart from import, that advance authorization holder, that license holder can import the goods which is available locally from the local supplier. For this, there is a small procedure which is called invalidation of license. That license which he has taken from DGFT need to be invalidated for domestic procurements. This is generally known as deemed export. So he can procure from a country outside India. He can procure locally without payment of tax. Both option is available under this license. He uses inputs manufacturing the goods and export the finished goods. Sometimes because of the urgency of the order, he export first and then he imports. Once goods is exported, he claim refund of the IGST paid or he can claim the refund of LUT of unutilized credit. And while exporting the goods, he has to mention advance authorization number in the shipping bill which he has exported. Now, why this advance authorization number he has to mention? Because at a time of importation, at a time of taking license, he undertakes to export the said goods, he undertakes in terms of quantity, he undertakes in terms of value. So he has to fulfill his export obligation. Export obligation will be considered based on shipping bill wherein the license number is mentioned. So these shipping bills will be submitted again to DGFT. Once the export obligation is over, DGFT will issue export obligation discharge certificate. This is how this mechanism works. So we need to understand that under GST, we know the export of goods, we know the refund claimed by exporter, but generally we don't know the back end which is happening to that very same exporter. And why it is important? Because this actually affects the process of refund, which we will discuss in the subsequent slide. So I hope you understand how that advance authorization issued and how it is closed. This is the brief understanding I have given. Now I will move to next slide. Now, what actually happened, we can understand from this side. The whole understanding, the whole method of procurement can be understood by this slide. There is an exporter, say example, Mr. A Limited. He want to export. It can be exported under LUT or IGST paid, whatever. But prior to export, he has to procure the goods. So there is a provision of procurement. So when I say export, it can be that possible that exporter will manufacture the goods in his own facility, or exporter will purchase and trade the goods. Both are permitted. So first, let's take an example. The exporter wish to manufacture the goods. So he will import the raw material. He will import the advance authorization. Under advance authorization, he will go to the custom and he will seek the exemption. That exemption is permitted under notification 79. 79 precisely give you exemption, which is issued in 2017 under Customs Act. It gives you the exemption from basic custom duty and IGST, from payment of IGST. While importing, there will be no IGST. Therefore, there will be no ITC on procurement on that transaction, particular transaction of import. Second, if that raw material is available locally, domestically, he can use that license and he can invalidate that license and he can procure that particular goods locally. Again, there will be no tax for which ITC is available. In these two transactions, the exporter don't have any ITC on that very same procurement. Alternatively, if you want to trade the goods, procure and export, then there is even no notification, that is 51, which is commonly known as concessional rate of purchase. So if he intended to export the goods directly, you trade the goods directly, so he can procure those goods at a concessional rate of 0.1% in total. There are two notifications, 40 and 41. 40 deals with CGST, 41 deals with IGST, but the total tax charged by supplier is 0.1%. So you can see that on the procurement channel, there is no ITC as such. And in case of 41, there is a very small or meager ITC. So if you see production wise, there is no ITC on this particular transaction. Now, when he export, he will do LUT and he can claim the ITC. And when he do IGST paid export, he will use the ITC for claiming the refunds. So why this slide is important? Why this concept is important? The government has put some restrictions on claiming refund in the second category, that is IGST paid refund. The restriction placed in Rule 9610. Now, what kind of restriction is this? Government want to regulate a procurement channel, a transaction production channel completely. So if you import any goods, you manufacture it, and if you export it. So as per government, there is no ITC which is accumulated in your credit ledger because you have not paid any tax on the time of import. So when you claim refund, it will tantamount to using the credit which is available otherwise than import. Precisely, it is a domestic credit coming from a different production channel. So you are taking a refund of a domestic procurement in the disguise of export. So here the note 1 is important. Under GST, it is not the export that decide your refund method, but it is your procurement method that will decide your refund route. So when we read the restriction, we will understand these things. When we export the goods with payment of IGST, the IGST paid route is not permissible when benefit on procurement is availed by the said exporter. Now, what happened at the time of introduction of GST? GST is introduced on 1st July. The exemption is granted from October 2017. the importer is permitted to bring goods without payment of duty, and the very same exporter are engaged in domestic procurement and export, domestic procurement and domestic sales, both generally. So what exporter do generally at a time of export, he sees what is the credit available to him in the credit ledger. And if credit is available, he do IGST paid export, pay the tax and claim the refund. And if ITC is not available, he clear the goods under LUT. This happens in most of the cases, most of the exporters. So he claimed the refund, he cleared the goods under IGST paid mechanism without connecting the same with his procurement route. Now here the restriction will come into picture. Now what is the restriction we will understand. The restriction is placed in Rule 9610. The current law looks like this, which is portrayed before you in the slide. Now, what is written is the person claiming refund of IGST tax paid. It is applicable to exporter. The person claiming refund of IGST tax paid on exports of goods or services should not have. It shades, he should not do below, he should not claim exemption of below mentioned notifications. So what it is saying, if you want to claim the IGST paid refund, you should not claim the exemption under these 3-4 notifications. So what is this notifications? Notification 48, that is advance authorization for domestic procurement. 40 and 41 deals precisely for concessional rate of purchase, that is 0.1, trading of goods and ultimately export. Then part 2, part B deals with notification 78 and 79. 78 deals with import by EO unit, and 79 deals with duty-free import under advance authorization at a time of import. Now, these 4 notification, those exporters who are claimed the exemption of these 4 notification cannot claim IGST paid refund. Now, what happened is government put to understand in a simple way, IGST paid export is not permissible for these 3 category. Basically, it is 4 category, 4 notification, but category are 3. One is domestic advance authorization, second is concessional rate of purchase, and third is import advance authorization. So if you are claiming this, according to government, there is no credit which is accumulated to you. Therefore, IGST paid by using ITC is not permissible. Hence, this will be the violation of 9610. Therefore, this refund is invalid, liable to be surrendered. Now, this is the whole case made by the department. But to understand this case, we need to understand what is the current legal positions. So what notification I have disclosed to you, restriction I have disclosed to you, this underwent various changes. And this is the summary of changes made in this 9610 from time to time. As you can see, there are 6 changes made in this rule wide notification. All are retrospectively made. These retrospective changes, except notification 54. Now, why I want to show this? Because this changes show that there is a lot of confusion which is there in the mind of government, which is there in the trade. Therefore, this required the intervention of government, and government intervene and then the changes from time to time. But as of now also, the issue remains. Now, this 54 is prospective, rest all are retrospective. Now, there are 2 notifications which is very crucial. It started with notification 75, but it ends with notification 54. So there are 2 notifications, 53 and 54. Both are issued on the same date, that is 9th October 2018. And what this says, now you keep in mind that there is an exporter, Mr. A Limited, who has exported the goods, who has purchased the goods by importing under advance authorization, who has also procured the local goods under advance authorization, who has also traded the goods under notification 40 and exported the said goods. In all the cases, he has claimed the refund since he is also engaged in the domestic sale and purchase. So there is a credit balance lying in his credit ledger, and therefore he has claimed the refund. Now, what this notification says? Notification says till 8 October 2018, since any exporter whose supplier has claimed, matlab A Limited has procured the goods, and suppose he has procured the goods from Mr. X Limited. So this notification, this amendment says, if X has done some mistake, then only A has to pay. Otherwise, A need not to surrender the refund. Precisely in this transaction, only few person will fall. After that, notification 54 is issued, which says, if a registered person availing the benefit of IGST paid on export and avail the benefit of listed notifications, which is we have discussed in the previous slides, then he is not liable to claim IGST paid refund. So precisely this violation will be triggered after 9/10/2018, 9/10/2018 onwards. So prior to 9/10/2018, it is regularized, regulated, rectified by the government through notification 53/2018. And this is further cleared by the circular, that is 125, which says 53 means all the past act, you need not to pay any tax, you need not to surrender any refund, or from 9 October onwards, you are liable to surrender the refund at all you have taken this exemption. Now, thereafter, there is a judgment, famous judgment, which is of the company Cosmos Film Limited, delivered by Honorable Gujarat High Court, whereby this 54, which was prospective, dated 9 October 2018, held to be retrospective, which effect from 2018, 23 October 2017. Now, with this interpretation, the department started investigation across India. Now, what is the case? By understanding all this legal provision, by understanding all this notification, what we understand is the department is of the view that if any exporter exported the goods, filed the shipping bill, claim IGST refund, and in that shipping bill, he has mentioned advance license number. And according to department, if it is after 23rd October 2017, then same is the violation of Rule 9610, read with the judgments of Cosmos Film delivered by Honorable High Court. So the department has started investigation, calling the details, issuing the summons to various exporters who has availed the benefit of advance authorization, and asking and convincing them to surrender their refund along with interest and penalty. Now, this being a very huge amount for the exporter, as you know, exports are very competitive and they have to compete in the international market. So in general, the export, the general rate of the goods is 18%. So those exporters who exported the goods might have claimed the refund of 18% on their exports value. So this is a very huge amount. Along with that, they have to liable to pay interest at the rate of 18% and penalty as applicable. So this invited a big trouble to them, and naturally they are not clear what is the intention of government and what mistake we have done at the beginning. Then different SSC has taken different view, but department is investigating. Now, while investigation, department has not verified the procurement method. Suppose there is a Mr. A, in our example, Mr. A Limited has exported the goods. They have procured the goods under advance authorization. But as I said, in advance authorization, you have two options. You can claim the exemption of BCD, you can claim the exemption of IGST. In both the cases, the license number will remain the same. So there is a possibility that exporter, while importing the goods, has claimed the benefit of only basic custom duty and not claimed the benefit of IGST. Therefore, he might have paid the IGST on the import. Therefore, there is no violation. So that particular transaction is also coming under the investigation. And there is a possibility that exporter has exported the goods under advance license, and then he is planning to import the goods subsequently. So the import per se has not happened yet. Therefore, the question of violation doesn't arise. So this investigation is being done without verification of actual documents for import of goods for domestic procurements. Now, what is the remedy available to exporter, which is proposed by the government and officers per se? That is, either you surrender the IGST refund claimed in cash. So you surrender this refund in cash, pay back the interest for the delayed payment of refund, and pay penalty as applicable. Currently, if you pay the penalty prior to show cause, they are proposing the penalty of 15%. Now, once you pay this, you will get the recredit of tax paid, that is refund surrender in cash. You will get the recredit if you pay interest and penalty as applicable. Alternatively, the exporter who has claimed the exemption on import can surrender that exemption claim under 79. So he can pay the import IGST along with applicable interest and get his bill of entry reassessed. So basically, there are two methods with which he can rectify this mistake. One, he can surrender refund in cash, pay interest as applicable, penalty as applicable, and claim the recredit, restore his original credit. Or alternatively, pay the tax IGST on import, pay interest as applicable till date, and get his bill of entry reassessed. This is the route which is being proposed to exporter by the departments and authority at large. Now, if this issue pertains to the year if we don't follow this notification, say for example, we assume government will take the cognizance that Cosmos film judgment is under judicial review, which says the 54 is retrospective. Let's hope that this judgment will comes in the favor of SSC, and accordingly the demand will be, the violation will be considered post 9/10/2018. If it happens, then the date of export, the refund will be to 9/10/2018, and currently we are sitting in 2023. It is almost 5 years has passed. So the interest of 5 years is almost equal to the refund value. So this will become a big amount, big cost to the exporter. And along with that, there is a penalty. So since the duty is credited, that is not the cost, but the interest and penalty is the cost. So is there any alternate remedy available to export, which we can discuss in the next slide? So what is the issue we understand? What is the legal position we understand? What is the contention of department we understand? Now, what is the remedy available to the exporter? As we know, exporter, while claiming the IGST paid refund, while shipping bill, and in that shipping bill, he mentioned advance authorization number, and he also write IGST paid amount, and he paid that amount by filing the monthly GSTR 1 and 3B. Accordingly, that refund got sanctioned. So what department is doing is they are issuing the show cause, they are doing the investigation, they are issuing the fresh show cause notice. In our view, the exporter can take the plea that the shipping bill which we have filed, the assessment is already done. That assessment of shipping bill has attained the finality, and same being an appealable order. Therefore, new proceeding without challenging the old proceeding cannot be initiated. This issue has been dealt in case of ITC Limited by the Honorable Supreme Court, but that judgment was in context of the customs law. But we hope this judgment will be relevant in this case. Further, since the department is investigation since inception, that is October 2017, the assessee for the period October 2017 till 8 October 2018, he can take the shelter of notification and contest suitably. Although the Cosmos film judgment is against the assessee, but it is exported, but it is under judicial review. And there is one more judgment of Gujarat High Court, Javeri and Company, which says 54 is prospective, but it was issued, it was delivered prior to the Cosmos film. But in that judgment, the Honorable Court says 54 is prospective. Therefore, as we said, whether it will be prospective or retrospective will be delivered, will be decided by Honorable Court. It is sub judice matter, but we hope that since the date of notification, date of implementation of notification is already mentioned in the notification 54. Therefore, it will be effective from that date only. Alternatively, the next ground that exporter can take is the government is saying that whatever cash refund you surrender, we will allow the recredit. It means it is revenue neutral. So if the demand is revenue neutral, on that ground also demand should not be demanded from the exporter. Anything which is revenue neutral, there is no cost to government. Therefore, there should not be any demand. So next ground can be that very same exporter who has exported goods for payment of IGST, since there is a restriction, is not permitted, he should not export the goods under IGST payment. Alternatively, he can do LUT export. In LUT route, he is permitted to claim refund in a pre-decided formula, whereby he is eligible for the refund. Let's assume under IGST paid route, he got the refund of 1 crore, and under LUT route, he got the refund of 80 lakhs. So to the extent of 80 lakhs, demand is not sustainable, because in any case, I am going to get that refund, that too in cash. So it is just the route I have wrongly chosen rather than the refund per se, because the exporter is permitted to claim refund under LUT route if he has not followed this route. So to that extent, refund should not be demanded, demand should not be sustainable. One more ground can be taken is government is of the opinion that we want to restrict the production chain, therefore we want to restrict refund accordingly. So government is of the view that if an exporter is importing the goods, he is using these goods, he is manufacturing it, he is exporting it. Therefore, there is no ITC, therefore there is no IGST paid refund. However, generally what happens is there are few raw material which is imported by the exporter, and there are few raw material which is available locally and he procure it. And along with raw material, there are services, various services which is being used by the exporter while doing his manufacturing process. All this is sitting in their ITC ledger, and on that supply, there is a tax which is charged by the supplier. Therefore, to that extent, the ITC is correctly used, availed, and refund is correctly paid. correctly claimed. Therefore, demand to that extent should not be demanded from the exporter. Sometimes it also happened that the exporter, while filing a GST paid claim, may pay in cash for the export IGST paid. Therefore, demand to that extent is also not sustainable. Further, the whole issue is revenue neutral. Therefore, extended period cannot be invoked. Department is issuing the notice under section 74. 74 deals with malified intention, suppression of facts with the intention to evade tax. In this present case, the department is making case based on the information which is available on the port of export, which is readily available. Therefore, the very base of the investigation says that there is no suppression. We have mentioned, the export has mentioned the advance authorization number on the shipping bill, which is visible to the investigation authority. The whole issue is revenue neutral because department is permitting the credit. Therefore, extended period is not invoked in this period, in this case. In any case, if we don't want to contest legally, he can seek the stay before by filing the writ petition before the Honorable High Court based on their jurisdiction and can take the stay till the final disposal of the issue. So these are various grounds which exporter can claim. Currently, the exporter is of the view that we have to pay this refund back to the government. We have to pay interest, then only we will get the credit. We have to pay penalty, then only we will get the credit. And this amount is not possible, not permissible, or not feasible for them on account of business cash flow, business hardship, and therefore they are looking for a feasible solution. This can be a solution for them and suitably contested before the authority. Now, what can be the possible ground for interest? So what we discussed is the ground for demand per se. Now we will discuss the ground for interest. As we say, the demand is revenue neutral. As we say, to the extent of LUT, the demand is not sustainable. Therefore, since demand is not sustainable, question of interest does not arise because there is no question of demand. But let's assume demand is sustainable and interest is payable. Then there is a separate code for interest under GST, that is section 50 of CGST Act, which deals with interest. There is a section 50 subsection 1, section 50 subsection 3, which deals with payment of short payment of output tax or payment of wrong availment of ITC. But this section don't have any provision with regard to levy of interest in case of recovery of erroneous refund. In the absence of charging provision of interest, there is no calculation method which is given by the government how to calculate interest. What is the rules for calculating the interest? Therefore, in the absence of that, interest may not be payable. Till the time government amend the law, again, time will test whether it is prospective, retrospective, how they provide this mechanism. But as of now, there is no mechanism, though charging provision for interest. Although there is a provision in section 73, 74, that is section for issuing show cause notice, which have a provision for erroneous refund, which mention the provision of interest under section 50. But in the section 50, there is no charging provision. An alternative with the ground can be to the extent of LUT refund, which is otherwise available in cash, the interest should not be demanded. This can be the possible ground for interest. Next, penalty. So department is also proposing penalty. So since we say that the whole issue is revenue neutral, whatever I pay in cash, the credit is available. Therefore, based on revenue neutrality, which is settled by the various courts, including apex courts, so the penalty should not be demanded. There is no suppression with the intent to evade tax. As we discussed in the last slide, the advance authorization number is mentioned, data is available on the portal, GST return is available to the department. Therefore, there is no suppression from the side of exporter. Therefore, extended period should not be invoked. Therefore, penalty should not be imposable on that ground. Since the matter is subject to continuous change, as we see, there are 6 changes happened in this said provision. So there is an inbuilt confusion. It is there from the government side. So when that provision itself is a faulty, then we are not clear. Penalty should not be invoked because the provision is subject to change. It is difficult to understand GST being a new law. It should not be treated as a from the exporter end that he was intended to evade tax. This cannot be the case. Therefore, penalty should not be imposable when the provision is subject to a lot of changes. Again, since the LUT refund is permitted, to that extent, penalty should not be imposable. And if exporter has paid the IGST in cash at a time of export, then since he has paid the cash, there is no loss to exchequer. He has already paid the amount in cash and then claim the refund. Then there is no question of refund. Penalty arises. And while procuring the goods domestically and exporting the goods and selling the goods domestically, in that tax period, the exporter might have paid the IGST or GST in cash. Those exporters is also not liable to pay penalty on this issue. So there are three sets of demand from the department side. One is demanding the basic refund, which is claim in violation of Rule 9610. Second demand is of interest in terms of Section 50. Third demand is penalty in terms of 73, 74, as the case may be. These three situations can be contested separately before the authorities. Now, this whole issue is will be subject to litigation of the authorities, will be subject to the judgments of court in time to come. And I feel that since the issue is revenue neutral, there is big relief we can expect from the government, because the government don't want any hassle to the exporter to pay such a huge amount, which will hinder their export. Therefore, we expect welcome changes by the government in short time. But before that, we have to face the investigation by the department, and we can represent suitably. This is the first leg of litigation which is happening to the exporter on account of refund. Now we will move to the next transaction, next issue, which is commonly known as pre-import condition. Now this pre-import, the word said, it has some connection with the import, and there is some condition which is mentioned in that. And you are right in assuming this. Now what does it say? Again, the same notification 79, which is issued under Customs Act in 2017, which grant exemptions from IGST at a time of import for the export of goods. In that notification, the government has added one condition, that is, shall be subject to pre-import condition. You can see this at the end. I have also bold that particular text. So the 79 permits the duty-free import to the importer, and he can import the goods, but parallelly he has to fulfill the pre-import condition. Now, what is pre-import condition? This pre-import condition was not there in the erstwhile law. Therefore, it was actually missed by the exporter also, and they feel that whatever scheme was available earlier, same scheme will follow, and there is no as such condition in that notification. But this pre-import condition was a Pandora box which is there in the notifications, and this was challenged before the Gujarat High Court. Gujarat High Court has held it ultra virus on two grounds. First is on account of financial hardship to the exporter, therefore it is not sustainable. And second is on account of artificial distinction, because in this notification there are two levies. One is BCD, second is IGST. This notification grants the exemption from both the levy, but the condition is attached to only IGST. Therefore, this says it is an artificial distinction, therefore not sustainable. High Court upheld it, and High Court held it ultra virus. The matter traveled to Supreme Court. Now, what Supreme Court says, and based on the Supreme Court, this judgment has came very recent, and this will knock the door of all the exporter and importer in a short time. Government has already issued the circular, and this is going to be a big Pandora box of demand, and this will also go with interest and penalty. What Apex Court held in course of customs principle, Apex Court has held based on legal principles that the inconvenience caused to exporter cannot be the ground for holding any provision as ultra virus. Therefore, this cannot be the ground. Therefore, it is valid. Second, they held that BCD and IGST both are separate levies. It should be treated differently. So, separate condition can be imposed in these two levies. Therefore, there is no artificial distinction in these two cases. Accordingly, Supreme Court held that the condition of pre-import is correct. The department are correct, and this condition is correct. Now, the department has started again investigation on this issue. Now, what is this issue? Department understood as if an exporter. Now, one more important thing we need to understand here is this condition was applicable from 23rd October 2017 till 10 January 2019. Yes, 10 January 2019. Why? Because government has realized this harassment to the exporter, and they have issued the notification on 1st 2019 under Customs Act and removed this condition. but this is issued prospectively. So for the period October 2017 till January 2019, this issue remains. So what department is investigating is, if an exporter is exporting the goods under advance authorization, and after exporting the goods, import the goods and claiming the benefit of IGST, that means he's not paying IGST at the time of import, but he has already done the export, then this particular transaction is subject to pre-import condition, and that will be amount to violation of notification 79. Now what demand they are making? They are demanding, since you have done the violation of 79, you pay IGST on that bill of entry on which exemption is claimed. Along with bill of IGST, you pay interest and penalty under Customs Act. Now this again create a big chaos to the exporter and importer both. Many importers have taken the benefit since it is available, and every exporter choose this option because of cash flow, and since material available duty free, they choose this option. They don't pay import tax, and then they export the goods and they pay LUT. They claim refunds, but they have never thought that this pre-import condition will convert into such a big litigation. Now department is demanding this tax. Now what can be the legal remedy to them? The understanding of the trade is that Supreme Court has confirmed the demand of pre-import condition. This is not the case. Supreme Court only upheld the pre-import condition that is mentioned in the notification. That's it. They have not decided on the factual part of the case. They have not decided on what is pre-import condition. They have just said whatever condition mentioned in the notification, department has all the power to impose such conditions. That's it. Interestingly, the pre-import condition which is mentioned in the notification is nowhere defined till now. So nobody knows what is pre-import condition. It is the interpretation which department is having, and interpretation can be different of department and of the SSC. So ultimately, this will be tested by the future notification or by the honorable courts. Further, this condition was not there in the erstwhile law. This also shows that government doesn't intend to bring this. Subsequent in 2019 January, government removes it. For this transitional period, this provision is there. Further, the pre-import condition has to be see qua inputs. In our view, what government intend is, whatever you import for the purpose of export and you claim IGST benefit, it should be ultimately exported. It should not be domestically used. That is the intent. Government doesn't intend that mere mentioning of shipping bill date prior to import will invite this demand. So department and investigation authorities are assuming this, interpreting this in a way that pre-import condition has to be seen qua shipping bill and qua import, rather than qua total import in the license and total export in that license. In our view, this will again a big investigation will be faced by the exporter in time to come by the importer, and they have to represent suitably. But these are the legal way out which can be contested before the department. What are the probable legal solution? Again, the importer who has claimed the IGST benefit can surrender that benefit, but he can take the exemption of without payment of interest, because in the case of Mahindra and Mahindra Limited delivered by Mumbai High Court, interest is not liable to be paid. Therefore, IGST can be paid, bill of entry can be reassessed, and accordingly credit can be taken. Hence, this will be a revenue neutral issue. Alternatively, he can say, since the credit is available, the case is revenue neutral. Since case is revenue neutral, demand is not sustainable. Accordingly, he can represent and contest before the department. Since and same ground can be taken for penalty. One important ground which we can take is, since the issue is revenue neutral, since there is no suppression by the SSC, the extended period cannot be involved. Most of the demand will fall within the limitation period under Customs Act. Since this demand is from the Customs, the Customs Act, unlike at GST, there are 3 and 5 years. Under GST, it is 2 years and 5 years. So limitation period is for 2 years. They can invoke, department is invoking extended period and issuing the demand. The exporter can represent before the authority and request to represent that extended period should not be invoked. This is the pre-import condition, which I explained. Now, one more thing, since we are running short of time, so I will wrap up this common period issue. What common period of import and rule 9610 I mean to say here is, as we discussed, 54 is effective from 9 October 2018. 54 is violation of rule 9610, means those exporter who was imported without payment of tax and exported with payment of tax and claim the refund will be subject to violation from 9 October 2018. Also, pre-import condition violation is existing till 10 January 2019. So there is a common period of approximately 3 months, that is from 9 October 2018 to 10 October 2019. During that period, if an exporter wish to regulate his transaction, wish to regulate his mistake, although he can contest on the demand separately, but let's assume we want to pay the tax. He can contest interest and penalty separately, but let's assume we want to pay the tax, surrender the refund in cash, or want to regularize this transaction. Then in this case, he should surrender the exemption claim at the time of export rather than surrendering the refund. Because if we surrender the export refund, the litigation with respect to import, pre-import will still remains. So this will invite a dual litigation on the same transaction. Therefore, it is advisable to surrender the exemption at the time of import and then claim the credit of the said import IGST rather than paying on the export. This slide precisely say that show cause has the provision of erroneous refund, but there is no provision under interest, which you have discussed in the previous slide also. This is the show cause which referred that section 50. Section 50 is there. 73 is referring the section 50, but there is no machinery provision, computation provision under section 50, which we have discussed. Now, the last point which I want to highlight is there is a notification which is issued, and this notification is very much in discussion among the trade authorities, that exporters, associations, and CA fraternity at large. What is the common understanding is that if we surrender the refund, we cannot get credit, because in this notification, government mentioned if you have taken the erroneous refund, you have to surrender the erroneous refund in cash along with interest and penalty wherever applicable. Now, this wherever applicable, investigating authority is assuming that it is applicable, therefore you have to pay, then only we will issue PMT3A. Kindly appreciate, PMT3A is a form by which you will get the credit which will be given by the department. Here we need to understand broadly there are three categories. There are three things. One is entitlement of the credit, second is procedure, and third is conditions. If we surrender the refund in cash, I am entitled to take for restoration. Now, interest and penalty is a condition and PMT3A is a procedure. So procedure cannot be a substantive condition, but definitely the condition, that is interest and penalty, is a part of that main entitlement. Therefore, the assessee can represent before the authorities with regard to the ground and interest and penalty before the authority that interest, there is no machinery provision, not payable, penalty is never neutral, not payable. Therefore, I have fulfilled this condition. Therefore, I am entitled to take credit. There is a misconception among the exporter that all three has to be paid and then only we can take credit. This can be contested before the authorities, and we hope that this will succeed in the favor of exporters in time to come. And at least it should succeed unless the department issue any relief or notification. Now, I invite the question and answer from the participants. Weber?
Okay. Yeah, Abhishek bhai, we have 3 to 4 questions.
Please.
Now, the first question is that is related to foreign exchange fluctuation. Like what his question is that at the time of export, the currency exchange rate was $1 equal to 82 rupees. And when the money was received, the currency exchange rate was $1 equal to 81 rupees. So the person wants to ask the question that can the department reject proportionate refunds saying that you have not realized 100% amount and you have received a lesser amount?
So it is, if I'm not wrong, it is on account of 96B. It says that unless the full consideration is not received, you have to pay back the proportionate refund, right? Hello?
But yes, but this question, they are mainly asking from the point of view of foreign exchange fluctuation. That
Understood.
They have not received lesser money, they have received lesser money from the exchange point of view.
I understood. So it is in perspective of 96B. What 96B intend to say is, it is regulated by RBI also. So suppose we export the goods having the value of $1 lakh and you receive $1 lakh. At the time of export, the value is say 73, and at the time of receipt, the value is say 83. So since you have received $1 lakh in full, you're not liable to reverse the proportionate refund. it has to be seen for foreign exchange rather than Indian rupees. Hello.
Yeah, I hope the person would have got the answer. I think it was in the line. The another question is like what the person is trying to say, that this guiding section for all these export and all these LUT with payment, all this is section 16 of IGST Act 2017. And in section 16, there is no restriction that in this case you cannot refund, in this case you cannot get refund. So is this rule 9610 valid and constitutional? That is the question.
Very, very good question. Very good question. As they rightly said, that governing section of section 16 is the 16 of IGST Act is mainly deals with zero rated supply, which is the which consists of two category, that is export out of India and supply to SHR. And there is no provision with regard, there is no provision or restriction in that section 16. Further, for the purpose of refund, the governing section is 54. Again, there is no such restriction. And 9610 being a substantive restriction cannot be imposed through rules. And that is also the ground before Honorable High Courts in the various petition that this is the substantive restriction cannot be placed in by way of rules. It has to be in section. Therefore, it is ultra virus. But again, as of now, there is a rule. Department officer is following that. But we hope that Honorable Court can only take the cognizance of it by way of writ jurisdiction. Hereby, they have the extraordinary power. And definitely, it is an ultra virus to the sections. There is no power in the section. Therefore, it is ultra virus. And this can be a strong ground in our submission also.
Okay. So the next question is that, like in case of export of goods with payment of tax, the entire refund procedure is automated on the basis of the ICAI details.
Yes, sir.
Now, the question is that due to certain clerical errors, we have not received refund of 2018-19 till date. So
Okay.
is there any alternate solution for this, for getting this refund?
Sir, this although doesn't relate to a topic, but what we can do is, since it is related to refund, so what the question I understood is, he has exported the goods, he has received the remittance, he has followed all the conditions. Because of some procedural error, he has not received the refund. So there is a mechanism of DG system at the respective port of export. He has to represent this case, satisfying the authority that I have exported the goods, I have paid the tax, I have filed the return, substantial condition is fulfilled. Now I have not received the refund because of the filing errors. So once officer is convinced, it will be referred to the DG system. DG system will share this detail to the Delhi DG system, which is headquartered at Delhi. They will see the whole case. If they are satisfied, they will give the in principle approval, and ultimately the IT support system, that is Infosys, will do the amendment, suitable amendment, and then refund will be credited. In few of our clients, we are successful in getting that refund where there was a filing error. So it can be done, but he has to follow this route. From the port of export, there is a refund section. There is an officer sitting there. That refund AC will be the person designated for this, and he has to elevate this issue to the DG system.
Yeah. Okay. So we have the last question for you. Again, that is not 100% related to your topic, but still I'm just quoting that question. That in case of refund of export without payment of tax, certain amount was rejected on the basis of ineligible credit. Okay. So there is an option that by filing PMT03, we can recredit that amount in a credit ledger. Perfect. Now the question is, the person has already filed the PMT03 2 years back, but still the department has not recredited the amount in the credit ledger. So what can be done?
Okay, I will say it is a different issue, but it is very, very related to our case also. Like I said, there are three things: entitlement, condition, and procedures. So refund is rejected, there is an order. Once refund is rejected, Route 93 automatically give you entitlement for recredit, right? So there is a clear-cut entitlement once refund is rejected. Now PMT3 is a form which is a procedure. Due to technological error, it is not credited, but that doesn't take your substantive right. And you can very well claim by informing to the department through your 3B. Although this is not a credit per se, this is restoration of credit. Therefore, time limit and other thing will not be hit by this. He has to inform to the department because of continuous follow-up. We are doing this and this has not happened. This is my vested right and it is supposed to be credited. It is entitlement and therefore I am taking, and he can take to 3B at all if department recredit it. then obviously he cannot take 2 credit. Out of that, 1 has to be reversed if he get 2 credit. Otherwise, he can take this credit. And at all, department issue raise the issue of credit that you have taken wrong credit, it is not reflected in 2A, 2B, whatever. Then you can show these documents, you can show this entitlement, so you can show the refund order very well in your favor. Then you can represent suitably, it will come in your favor.
Okay, I know Abhishek bhai, we are a bit out of time, but since it's last question, I'm just taking that last question, that in case of refund of export with payment of tax, certain amount has been rejected. So the question is quite simple, that for the rejected amount, can I simply reclaim the credit in my credit ledger?
So their export is with payment of tax?
With payment of tax. And obviously they have utilized the input tax credit at the time of payment. So their credit ledger has become 0. So for the rejected amount, can they reclaim the credit in their...
So technically what happened is, the procedure is like that: to file GST 1 and 3B, to file shipping bill. These 2 documents is filed by the exporter. So the department, that GST data is thrown to the EDI system, that is
Sir, Abhishek bhai, just one thing that I skipped. This question is related to export of service, not goods. So that is not an automated refund. Manual application would be.
Okay. So you get lesser refund. Definitely you can claim. It is restoration of credit. Rule 93 is squarely covering this.
Okay, I think we have covered all the questions, Abhishek bhai, and it's not about the buttering, but honestly speaking, at the start of the session, I knew that there cannot be a better person than you to take this particular topic. So thank you so much, and I'm sure the 500 other participants will also agree with me. They cannot say simultaneously with me, but I'm sure they are quite satisfied with this. Thank you so much, and now over to you, Swati.
Thank you very much.
Thank you so much, Vaibhav ji and Abhishek ji, for the wonderful sessions that you took and resolving all the queries of members. Now for the second session on the overviews of various textile policies, including Maharashtra State New Textile Policy 2023-28. Now it's a great privilege of mine to introduce such a learned faculty, CHGB Modi sir. He has various degrees including BCom, FCA, CS, and various other certification courses that he did. He is also appointed as an expert on the panel of Women Entrepreneurship Platform of Niti Aayog by ICAI, and also as Securities Market Trainer Smarts by SEBI and NIST. He has also delivered various lectures in international conferences such as Indonesia, Bali in IRC. He is also a co-author of the book Practice Manual on the Package Scheme of Incentive 2013, published by WIRC of ICAI. With these words, I welcome you, sir.
Yeah, good evening, ma'am. Just remove this slide of Abhishek ji.
Yeah. Abhishek ji, can you just off the screen sharing?
Or I can share my screen directly.
Yeah.
I have already stopped it, madam, on my end. Let me check again.
Okay. Abhishek ji, still we are just able to see your screen only.
Is my screen visible now?
Is it okay, madam?
Oh, yeah, perfect, Abhishek ji. Yes, sir. Your screen is visible now perfectly.
Okay. So since Mr. Modi is speaking, the front slide is also of Mr. Modi. Friends, we are going to discuss about overviews of various states' textile policy vis-a-vis the Maharashtra textile policy, which is recently introduced by the government of Maharashtra. Why this topic is chosen by CPE committee? Today, I am not going to discuss with you the percentage, the amounts, the terms and conditions to avail the subsidy. My interest in front of you all will be the professional opportunities available to be practicing chartered accountant when the various state governments declare their various incentive policies for attracting the industries in their respective states. And in my opinion, since in this practice from last 32 years, what I have observed that most of the entrepreneurs or the industrialists, they know or they may not know, or 99% they don't know, or they are unaware about the incentives made available wherever they are locating their projects. But if we chartered accountants come into this area of practice, what role we can play and how the entrepreneurs of this country, not only this country, the world over, when the Prime Minister of our country has, from the Red Fort in 2014, has proclaimed ICAI, Bharat Mein Nirman Kar. So when we understand the various, and today the sector specific policy we are discussing, that is textile. So what the Gujarat government is offering for establishing the textile unit, what the Madhya Pradesh is offering, what the Karnataka is offering, and if we are aware about various states government policies, we can prepare a due diligence report on behalf of our clients or on behalf of a promoter who is planning to establish a textile unit. With that perspective, I request all the participants to look after this topic, because while I will be discussing this topic in front of you, there is a great professional opportunities available to you. Somebody comes to you and asks him, sir, mujhe 500 crore ka project hai. I want to invest, say 500 crore in textile project. Which is the best state where I will get maximum benefit in the form of grants, subsidies, incentives by the state government? Ignore the infrastructure, the approach of the bureaucracy and all these things. We are discussing about the financial benefits which are made available by the respective states governments. So with that perspective, I want to explain in front of you how to enter into this area of practice, what are the professional opportunities available while understanding various policies. And I will take lastly to you the recently introduced policy of the state of Maharashtra, that is Sustainable and Integrated Textile Policy 2023, which will be valid till 2028 by the state of Maharashtra. So just listen to our Prime Minister, what he says about the textile sector in the country. One minute, ma'am.
मित्रों, एक अभी हम टेक्सटाइल पॉलिसी लाए हैं और मेरा टेक्सटाइल पॉलिसी का मेरा मतलब है कि मैं नहीं चाहता हूं कि मेरा कॉटन ग्रोवर अपना कॉटन बेचने के लिए दर दर भटकता रहे। और इसलिए मेरी एक फॉर्मूला है, फार्म टू फाइबर, फाइबर टू फैब्रिक, फैब्रिक टू फैशन, फैशन टू फॉरेन। जहां कॉटन होगा वहीं धागा बनेगा, जहां धागा है वहीं कपड़ा बनेगा, जहां कपड़ा है वहीं रेडीमेड गारमेंट बनेगा, और वहीं से उसको दुनिया में एक्सपोर्ट करूंगा और मेरे किसान की इनकम बढ़ेगी।
So you are listening to the statement of our Prime Minister that he has a 5F vision as far as the textile sector is concerned. And with that vision, the government of India is working toward the development of the textile sector in the country. And with the same vision, the successive state government in the country are formulating their policy related to textile sector in the country. While we are discussing about the textile policy, we have to also think about whatever is declared by the central government, which is the apex institute in the country, which is having policies as far as the textile sector is concerned. That is the Ministry of Textile, Government of India. And they have come out with a very attractive scheme, which is known as Prime Minister Mitra scheme. Textile Ministry, service to the nation. How much schemes are in existence? See, we are first discussing about the central government schemes, and then we will go to the respective states government. Within the time allotted to me, I will try to put in front of you, while I will discussing the name of the scheme. Just imagine the opportunities available to we chartered accountants, what role we can play, how much we are aware about the scheme, and how we can educate our end user, that is the prospective entrepreneurs in the country, to know them about the subsidies available in their respective schemes. So, Ministry of Textile, Government of India, there is a number of schemes which is declared by ministry, that is handloom schemes. handicraft scheme, technology upgradation scheme, scheme for integrated textile parks, skill development schemes, powerloom sector scheme, jute sector scheme, national mission on jute is the new scheme of the government of India as far as the jute sector is concerned. Integrated wool development program, silk sector schemes, Northeast textile promotion scheme. So these are the various schemes of the government of India, Ministry of Textile, as far as the schemes which is declared by the central government. And if you see each scheme, particular state is one district, one product is the logo of the Uttar Pradesh government, and handloom, handicraft are the uniqueness of particular state. And with that object, the audience who are listening to me, they can think about the area in which they can practice of these schemes of the central government. Then the government of India has come out with National Mission on Technical Textile. Can you imagine the future of India is in technical textile? According to our behavior, the color of our shirts will change. That is the mission of the technical textile. And the technical textile, the government of India has come out with an outlay of 1,480 crore rupees. Under National Technical Textile Mission, the government of India is going to offer incentives and subsidy to the entrepreneurs who are manufacturing technical textile within the country to the extent of 1,480 crore rupees. Just imagine what role we as a practicing CA can play if we are aware about this mission, the schemes, the guidelines, who are eligible, who are not eligible under the National Textile Mission of the government of India. What are the various applications under textile, under this technical textile? Agrotech, BuildTech, ClothTech, Geotech, HomeTech, Indutech, Mobitech, Meditech, Oaktech, Protech, Pactech, Sporttech. These are the various sectors in which the textile is utilized by the end users of the end users of the citizens. And as an entrepreneur, if anybody manufacture these products, he will be eligible to get the incentive under National Mission on Technical Textile. What are the products under applications? See, as far as Geotech is concerned, geogrids, geocomposites, geobags, geonets, Agrotech, anti-hail, anti-birds nets, crop covers. So you name the product, there are various products in which this technical textile is used. And India is net importer of textile, this technical textile. And there is huge opportunities available for exports in technical textile. So government of India under National Mission of Technical Textile is giving importance by way of incentivizing the entrepreneurs to the extent of 1,480 crores rupees. So why technical textile? Because it's a future of India. Then we will come to the next scheme of the government of India, that is Mega Investment Textile Parks, Mitra scheme, which is introduced by the government of India for the benefit of having world-class infrastructure in the country, integrated textile park in the country, for which the government has appropriated a budget of 4,445 crore. When I'm using, or I'm specifically coming out with the figures, that is 4,445 crore. It is the fund earmarked by government of India to be offered by way of subsidy, by way of grant, by way of incentive to the prospective entrepreneurs in the country. Now, friends, we as a practicing chartered accountants, we as an MSME consultant, how we can contribute, how we can facilitate between the government, between the Ministry of this textile and the prospective entrepreneurs to make them synchronize, how to get the subsidy from the government of India in the hands of the prospective entrepreneurs by guiding him since the idea has come in the minds of the promoters that he want to establish a textile park or a textile industry or a technical textile industry in the country. So as far as this Mitra scheme is concerned, the government of India has earmarked 4,445 crore rupees to be offered as subsidy till 27-28. 27-28, by 27-28, there will be integrated textile park established in the country, and the identified districts and the identified states are Madhya Pradesh, Dhar district, Uttar Pradesh, Lucknow district, Maharashtra, Amravati district, Telangana, Warangal district, Tamil Nadu, Virudhunagar, Karnataka, Kalaburgi, and Gujarat, Navsari. So friends, if you belongs to this area of the in this area of the country, and if you belong to say Maharashtra or say Gujarat, you can imagine the professional opportunities coming as an MSME consultant, as an MSME subsidy facilitator to the prospective entrepreneurs by understanding, by knowing the guidelines, the procedures, the compliances to be fulfilled, so that the entrepreneurs who are establishing the textile industry in this area of your states. So that is the purpose of this seminar, the opportunities available to you and how to grab the opportunity. Since the government of India has come out with the Mitra scheme and they have identified 7 locations in the country and the districts in the country. So if you are from Navsari, if you are from Dhar district of Madhya Pradesh or from Amravati in Maharashtra, you can see, you can help, you can become a facilitator for the government of India, for the government of Maharashtra and the entrepreneurs who are planning to establish the industry. So friends, when I am discussing about the central policy, similarly, when I will be discussing about the state specific policy related to the textile sector, Maharashtra has come out with the Maharashtra textile policy. So Government of India is establishing integrated textile park having investment more than 1,000 crore rupees in Amravati. Similarly, the promoters who will be establishing his unit in Amravati in textile sector will also be eligible to get the incentive or subsidy under Maharashtra textile policy. So there will be dual benefits from the central government and from the state government, but subject to condition that in this country can avail more than 100% of the capital cost of the project in the form of subsidy. What we routinely do in our traditional practice is GST consultancy, tax consultancy, or say corporate consultancy. We always say to our clients, sir, you have to pay this much advance tax, that much TDS, that much GST, that much say taxes and all these things. But in this area of practice, that is industrial consultancy and subsidy consultancy, it's a win-win situation because you are helping to the promoters, to the entrepreneurs, that they will get the benefit by establishing the unit in the form of subsidy by the state government or by the center. So here a different professional services are provided by chartered accountants, which will have a cash inflow in the balance sheet or in the cash inflow in the profitability of the prospective promoters who want to establish a textile project. So it is altogether a different area of practice. So this Mitra scheme is offering subsidy for establishing the textile park, and that textile park will attract the investment in those locations in textile sectors. Each park is expected to generate. What will be the benefit to the government when they are establishing or they are giving 4,400 crore rupees in the form of subsidy for establishing the textile park? 1 lakh direct jobs. 10,000 crore investment is expected in these 7 textile parks, and around 2 lakh indirect jobs will be created by this world-class infrastructure under this Mitra scheme of the central government. Then this is Mitra scheme. Previously, I have discussed with you the National Mission on Technical Textile. Then another scheme of the central government. You know, there are 14 sectors declared by the Niti Aayog or Department of Promotion of Industries and Internal Trade. 14 sectors. One of those sectors is Production Linked Incentive Scheme for Textile, PLI scheme for textile, and the fund earmarked by the government of India is 10,683 crore, which will be disbursed under this PLI scheme over the period of 5 years for manufacturing notified products by the existing or proposed entrepreneurs in the textile sector. Just imagine the role we can play. Just think yourself, those who are attending this webinar, that if I contribute and through my consultancy and entrepreneurs get 10 crore of rupees in the form of subsidy, what will be his satisfaction that with the help of this CA that I got a subsidy of 10 crore rupees. What will be the professional fee he will be paying? What will be the satisfaction in the mind of the promoters or on the face of the promoter will be? So 10,683 crore is earmarked by the central government under PLI scheme for textile. And what is expected by the incurring of this 10,000 crore rupees? About 19,000 crore investment is expected. All these schemes are with the aim of taking Indian economy to the 5 trillion. Make in India, make for the world. Vision of 5 trillion economy, doubling the farmers' income. That is the vision of the government. Vocal for local and local for global. That is the mission of government. So while government is incurring 10,000 crore rupees in PLI scheme to under textile, a capex of 19,000 crore will be incurred in the state, in the country, and there will be around 3 lakh crore turnover will happen in the country by incurring expenditure on production linked incentive scheme of the government. And under this scheme, 11% textile PLI may offer up to 11% soaps for new entrants. Incentive rate for companies above 500 crore is up to 7%. And the incentives will be minimum prescribed turnover. They have given year-wise figures and the rate of incentive. It is 15% of MRP or the 15% of the turnover, 14% of the turnover, 13%. It is as good as reimbursement of the GST, which is paid by the promoter while selling the goods in the country. Or you can say it is just a recovery of the taxation paid by the unit to the central government. It is just a refund of that. State-wise, while I have discussed with you certain policies of the central government, now we will think about some of the state policy. Say there are around 28 states in the country, and each state is having their own policies. As far as Gujarat is concerned, Gujarat has come out with Gujarat policy, Gujarat Industrial Policy 2020. And out of in this 2020 policy, the state of Gujarat has come out with 14 state policies, sector-wise policy. Similarly, as far as Maharashtra is concerned, Maharashtra is having at present 16 policy for the state of Maharashtra. Similarly, Rajasthan government, Odisha government, Madhya Pradesh government, Telangana is having IT policy, electronic policy, e-vehicle policy, or say number of policies are there. But today's topic is restricted to textile policy. I am concentrating, but just imagine the opportunities available to us in this MSME sector, in this incentive sector, in this government, say grant and subsidy sector, that there are multiple states, each state multiple policies. And if we have a vertical in office to take care of each say particular policy, there is a huge professional opportunities waiting. This is a sunrise area of practice, untapped area of practice, which we as a chartered accountant never thought about that we can practice in this area of that. Government of Telangana. When I am telling you government of Telangana, what is the name of the policy of the government of Telangana? Textile and apparel policy of the Telangana government, which has come into existence in 2017-18 and which will be valid for 5 years. Government of Madhya Pradesh. I am not going in detail of the policy. I just want to put in front of you the name of the policy and the period of the policy. While I am discussing with you the period of policy, it means that the policy has come into existence on this date and the policy will be valid for another 5 years, because each government has target how much funds they have allocated for the development of textile sector in their respective states, and accordingly they put a target because of in front of the entrepreneurs to come and establish their manufacturing unit in their respective states. Government of Madhya Pradesh, new textile policy and garment policy. See, textile and garment, though both are known as textile, but the Madhya Pradesh government is giving thrust to garment manufacturing, and that policy has come into existence from 2019 till 2024. So, as a practitioner, as a chartered accountant, we have got the opportunity to help the textile sector over the period of 5 years, because the entrepreneur will take time to establish the unit, say by 6 months, or according to the status, whether it is a large scale, mega scale, ultra mega scale project, it will take its own time to come into production. But see, the opportunity is available. We can guide, we can facilitate to the entrepreneurs over the period of 5 years by unfolding, by decoding the policies of the Madhya Pradesh government. And while we are decoding the policies of the Madhya Pradesh, we have to compare with the policy of the Gujarat, we have to compare the policy with the Telangana state. And if we make a due diligence report between, say, we have in front of us 500 capex. An entrepreneur has come and he said, told you that I want to incur 500 crore rupees in the form of capital expenditure for, say, establishing a spinning mill. So can you help me to prepare a comparative statement or a comparison between 3 states, 4 states, which is the best state which is offering maximum benefit if I establish my unit in that state. So this way we can help the entrepreneurs in the country by analyzing, by decoding, by making a comparison between different state policy. So this is a Madhya Pradesh textile policy. Government of Odisha. Odisha apparel and technical textile policy. It is a combined policy for apparel as well as technical textile. So Odisha government has also come out with a technical textile policy along with central government. See, there is a national mission on technical textile. An entrepreneur can avail, because each state government is permitting that they can avail any other benefit which are declared by central government, provided the total benefit should not be more than 100% of the project. That is a limiting factor. And none of the entrepreneurs in this country is expected to get more benefit than what he has incurred in the form of capital expenditure. So this is one of the policies of the Odisha government, that is Odisha apparel and technical textile policy. Government of Uttar Pradesh doing extreme work. I think I have, to my knowledge, there are around 21 policies at present in existence as far as Uttar Pradesh is concerned. And Uttar Pradesh is doing uttam work, extraordinary work as far as the industrial growth is concerned. And the days are not far ahead that Uttar Pradesh will rank first as far as the industrial state of the country's ranking is concerned. So Uttar Pradesh has come out with a Uttar Pradesh Textile and Garmenting Policy 2020. If someone wants to go in detail, they can download the policy, they can understand what is the definitions, how much percentage of benefits are made by the Uttar Pradesh and ODOP, one district, one product is the brainstorming or the brain or the concept which is introduced by the Uttar Pradesh government. ODOP, one district, one product. So this is the policy of the Uttar Pradesh government, that is Uttar Pradesh Textile and Garmenting Policy. Government of West Bengal, incentive scheme for MSME in powerloom sector. You know, Bengali saris are very famous. This Bengal, or say we whenever there is marriages in the family, people goes to say Calcutta to purchase the marriage all clothes and garments. So government of West Bengal has come out with the incentive policy schemes for MSME in powerloom sector, specifically for powerloom, rapier loom, airjet looms, waterjet looms. So a specific policy is declared for a sector specific in the textile sector by the West Bengal government. Government of Gujarat, scheme for assistance to strengthen specific sectors in the textile value chain. Surat, India's biggest city in the country, and Surat is known for textile. Surat is known for textile, and the government of Gujarat has come with a specific, sector specific, to strengthen the textile value chain. When it is the word says textile value chain, just remember the word which is uttered by our Pradhan Sevak, 5F, farm to fiber to fashion to foreign to garments, 5F. So the government of Gujarat has come out with a value chain, complete value chain, from say thread to garments to export. And that is the policy of the government of Gujarat. The policy of government of Gujarat as far as this textile is concerned is effective from 4th September 2018 and is valid till 31st December 2023. And what is offered by the government of Gujarat under this textile policy of the Gujarat government, if the unit is classified as an MSME unit, then whatever term loan the unit takes, he will get 6% interest refund. Interest subsidy is provided to the promoters. Then as a practicing chartered accountant, what should be our guiding force? We will tell our entrepreneurs, sir, if your rate of interest is say 9%, I will tell you to take maximum loan. It is better if the bank is ready to pay 100% of the machinery cost or 100% of the project cost, you obtain the loan 100% of the project. Why? Because I am getting 6% interest refund. There is no upper cap. So it is better that if I get an interest at 9% from the banks, I should have a maximum repayment period and I should obtain the maximum loan on as far as my capex is concerned, because effectively I am paying only 3% if the rate of interest given by the bank is 9%. So this way we can guide to entrepreneurs how to get the maximum benefit out of the scheme declared by the center. Normally what happens, a general man or general businessman will go and he will say, bank will pay, tell him, oh, we can give you 65% loan, not beyond that, and your repayment schedule should be 5 years. But we are aware, we know that the government of Gujarat is offering 6% interest refund. Then we will tell our entrepreneurs or to the bankers that we need 6 years, rather than 5 years, we need 10 years repayment period, because my benefit will be there over the period of 6 years. I will ask for moratorium period of say 3 years if the banks are ready to give me. So this way you will get the advantage of maximum interest refund in the initial period, because the moratorium period is up to 36 months. This way we can guide to our entrepreneurs to get the benefit out of the various schemes of the central government and state government, and particularly as far as Gujarat is concerned. Large enterprises, large scale enterprises having number of employees up to 100%, 4% interest rate, 100 and 200%, 4.5%, 201 to 500%, 5%, and more than 500%. So it is employment based incentive, maximum employment, then the benefit will be related to then you will get higher rebate on interest rate. See, you have to regularly pay interest to your bankers. The interest will be refunded by the implementing agency, which is appointed by the respective state to implement the textile policy in their respective state. Bankers are going to recover 100% interest, which is levied at the time of sanction of your term. You have to regularly pay the interest. The refund will come from the implementing agency, which is appointed by respective states governments. Power tariff benefit. See, normally the textile sector is always having a say that the rate of power tariff is not affordable. So the government and each government in the country, they are having this benefit offered to the textile sector in the country. If it is weaving activity, ₹3 per unit, having low tension connection, and ₹2 per unit if is having high tension power line connection. Other eligible, other than weaving activity, then ₹2 per unit, either HT or LT connections. Energy and water conservation benefits, solar panel installation on the rooftop of the textile units, 20% of the cost of machinery and equipment. See, energy and water conservation. The word is energy conservation, green energy. So 20% of the cost of machinery and equipment, maximum up to 30 lakhs. See, it's a direct benefit by installing a solar power. Solar power will reduce your power cost. It will have accelerated depreciation benefit in the balance sheet. The depreciation will be at higher rate if you establish a solar panel. It's a win-win situation. The power cost will be reduced. The entrepreneur will get higher depreciation, and the government of Gujarat is offering 20% of the solar installation, subject to maximum 30 lakh rupees cash subsidy. So it's a win-win situation. Will you agree with me that yes, there is a professional opportunity? Most of the entrepreneurs are not aware about this, but by virtue of such type of webinar and seminars, the institute try to educate our members to enter into different areas of practice. And as far as this MSME area of practice is concerned, this incentive is a very attractive area of practice, because since I started delivering my topic, you will come to know that there is a central government scheme, there is a state government schemes, and the schemes which are offering the benefits, which are very attractive benefits. Assistance of 50% of the fee paid toward energy audit. If any enterprise which is in textile sector, and if that enterprise undertakes energy audits or water audit, they will be reimbursed 50% of the cost of audit, subject to maximum 1 lakh rupees as a grant. Technology acquisition. If there is a traditional machinery and he improves the machinery, if he purchases the advanced technologically improved machinery, then 50% of the investment in technology acquisition, upgradation with maximum up to 25 lakhs. If the promoters of an existing manufacturing textile unit incurred 50 lakh rupees in technology acquisition, he will be reimbursed 50% of the cost, maximum 25 lakh rupees as a subsidy. Then for textile park, within the state of Gujarat government and the textile park, if somebody establish a textile park, then 15 crore or 25%, 60 crore rupees expenditure, 15 crore will be reimbursed under Gujarat textile policy, 100% stamp duty exemption, 100% reimbursement of stamp duty on purchase of plot to the promoters who will establish a textile unit in that textile park. 25% of the cost of hostel and dormitory housing established within the textile park up to 7.5 crores. So these are the various benefits which are offered under Gujarat textile policy. Government of Andhra Pradesh, the Textile, Apparel and Garment Policy 2018 to 2023. The policy is on the verge of extension. New policy has not been declared. What are the incentives which are made available by the Gujarat, by the Andhra Pradesh government, AP government? 25% for MSME and up to 1 crore. Mega project, 25% up to 3 crore for infrastructure provided. Ultra mega projects, 25% up to 5 crores. Capital subsidy, 20% of the fixed capital investment limited to 15 crore. Just compare with Gujarat government. Gujarat government is giving 6% interest refund, whereas the Andhra Pradesh government is offering 20% of the fixed capital investment limited to 50 crore. A comparison. Suppose a unit has come out with a 5 crore project, then immediately a chartered accountant will prepare Excel sheet. By suppose he has taken a 300 crore rupees or say 350 crore rupees loan, then how much interest refund will be there? Similarly, what will be the reimbursement as far as this 20% of fixed capital investment, a comparative chart between Andhra Pradesh government and between the Gujarat government. This way we can facilitate, we can guide, we can educate, we can analyze the policies of respective states government. Mega projects, 20% of fixed capital investment, 30 crore. Ultra mega project, 10% of the fixed capital investment up to 50 crore. Capital subsidy for green measures, green energy, sustainable economy, 50% of fixed capital up to 20 crore, 50% mega up to 30 crore, ultra mega 50%. So as a practicing chartered accountant, what is important for us? The name of the scheme, the percentage to the sector, there are how much sector? Micro, small, medium, large, mega, ultra mega. Then what are the percentage of subsidy on fixed capital investment? Being a chartered accountant, we know what is fixed capital investment. The definitions of fixed capital investment related to particular state may differ, but as a practicing chartered accountant, whatever is taken to asset side of balance sheet under the head fixed asset is a fixed capital investment. On that, the government, the central government is offering subsidy and subject to limitation of 20 crore, 30 crore or 50 crore. Interest subvention. See, Gujarat government is having various slabs, 6% to 4% to 5%. But under the Andhra Pradesh policy, interest subsidy at the rate of 8% per annum. I think bankers should come out with a product, particularly that there cannot be repayment schedule. There is no repayment schedule. You can avail, you can pay interest or your principal after the 7-year period, which is prescribed maximum period of interest refund. And whatever repayment we will do will accumulate as FDR in the bank. So what will happen? We will get 8% refund from the state of Andhra Pradesh as interest subsidy, and whatever repayment we are making to the bankers, we will keep in fixed deposit of the bank, and on that we will also earn the interest. Bank is secure because FDR are marked to them. So we are getting 8% refund from central government on our original cost of term loan, and we are getting interest on FDR. Bank secured, entrepreneur is happy. Who has helped? Who has guided? Planning is not a crime. Planning is not a crime. So we have planned in such a way that my prospective entrepreneurs has got the maximum advantage out of the scheme which is declared by the Andhra Pradesh government. So as far as interest subsidy 8%, 7.5% for spinning and modern ginning industry. Gujarat is famous for ginning and pressing. Maharashtra, Madhya Pradesh, Karnataka, Telangana, Andhra Pradesh, Odisha. There are 11 states in the country where cotton is grown in large quantity. Capped at 12.5%, taking into consideration assistance from all sources. So if the central government is offering subsidy and if the state government is offering subsidy, a promoter who is establishing a textile unit within Andhra Pradesh can get interest subvention or interest benefit up to 12.5%. See the upper ceiling prescribed by the Andhra Pradesh government. So again, a comparison between Gujarat government, between Uttar Pradesh government, between Telangana government and Andhra Pradesh. For 7 years, see the maximum period of repayment or interest subvention under Andhra Pradesh government is 7 years. So what I told you, ask your bankers that there cannot be repayment schedule up to 7 years, and after 7 years, in 1 year, the entire loan can be repaid. That is a point. See, bank has accepted our proposal and we are working according to the scheme. We are getting 8% refund and 2-year moratorium. So take the benefit of 2-year moratorium. Just pay interest and get the interest refund. Just imagine if your bank is charging 9%, 8% refund at 1%. If you run the unit, what will be the cost saving? And see the number of units will come in the textile sector. I think we can make a great value addition in the balance sheet, in the profitability of a prospective entrepreneurs who is planning to establish a textile unit. By analyzing, by decoding, by making a planning so that to maximize the benefit under the textile policies of the respective state. Skill support per employee 7,500 rupees per trainee or 10,000 rupees per trainee for mega ultra mega. So employment incentive, or it is either or, then again a role of chartered accountant. Whether, see, Government of India has come out with old system of tax payment return filing or new system of tax return filing. Similarly here we can play a great role by which whether I should go employment incentive or whether I should go for SGST. Cap on overall incentive, 100% of. See, you cannot avail interest benefit more than 100% of your capital investment. So that is for garmenting, apparel, made-ups, integrated plants, processing, technical textiles operation as per as Andhra Pradesh government. Government of Bihar. See, I am supposed to put in front of you the various textile policy of various states government. It is not, the topic is not that I can cover within say 50 minutes or 60 minutes. I am just putting in front of you the opportunities, the area of new area of practice to be practicing chartered account. Bihar Industrial Investment Promotion Policy, Textile and Leather Policy 2020. What are the incentives? The chart is there in front of you, 10 crore to 2.5 crore, and the various incentives, the what type of incentive, percentage of individual, maximum limit, and the respective policies of the state. Government of Haryana, Haryana Atmanirbhar Textile Policy 2020. As I told you, you name the state, there is a textile. Even in Uttarakhand, Uttaranchal, even in Himachal, there is a textile policy. Period of operation up to 2025. Textile units, new and existing, both are eligible under Haryana textile policy. The chart is in front of you. How much benefits will be available? See, 40% maximum 3.5 crore, 40% up to 5 crore. See, understanding, remembering, having the knowledge of various textile policies of various states, we can help the entrepreneurs to identify a best location where he can obtain maximum benefit by way of subsidy from the respect. That was the tagline of my seminar. That you just take in front of. Promoting green and sustainable production, anchor and mega units, textile parks in the Haryana states. Government of Karnataka, new textile and garment policy 2019 to 2024 is the policy which is declared by the government of Karnataka. Period of operation from 4th November to 4th November 2024. What type of incentives are offered? That is 30 per zone. They have identified the states in different zones, zone 1, zone 2, zone 3 and zone 4, and accordingly they are offering subsidy on fixed cap, trust sector, other sectors. As far as MSME is concerned, 30%, 25%, 20%. So the most underdeveloped part of the Karnataka, the higher the subsidy. The more developed part of the Karnataka, lower the subsidy. Credit linked capital subsidy for large enterprises. Interest subsidy, 5%. Compare with it Telangana to Andhra Pradesh. Compare it between Gujarat to Telangana, 5% subsidy. Power tariff benefit, rupees 2, rupees 1, different type of sector, power tariff subsidies is offered. Yeah, now we'll come to the, I think there are only 5 minutes left, but this is a new policy of the state of Maharashtra, which has come into existence on 2nd June 2023. And this is a very new child of the government of Maharashtra. It is very attractive. So far, whatever I have learned, whatever understood by various states government of the country, I think the government of Maharashtra is offering attractive benefit, higher benefit as compared, not because I am from Maharashtra, but by unfolding, by analyzing, by understanding, by reading the various policies of various states government, the government of Maharashtra is offering farm to foreign policy. That is the motto of the state, and it is envisaged that around 25,000 crore investment will be done under this policy over the period of 5 years. 5 lakh people will be given employment under this policy of the states of Maharashtra. The park policy, the entire state of Maharashtra has been classified as zone 1, zone 2, zone 3 and zone 4, and whatever units will come under zone 1, that is Akola, Amravati, Buldana, Bandara, Chandrapur, Gadchiroli, it is known as a Vidarbha part of Maharashtra. Then this is Marathwada, this is Ahmednagar, Nasik, Nandurbar, and this is Paschim Maharashtra, that is Mumbai, Palghar, Pune, Ratnagiri, Satara, Sangli, Kolhapur, Solapur. These are the 4 zones of the state of Maharashtra. And this is integrated textile policy, capital investment subsidy, various definitions are given. Even expansion projects are also eligible to get the benefit under this Maharashtra textile policy. Conditions are provided, how much expansion should take place so to become eligible to avail the benefit under Maharashtra textile policy. What are the, which will, on what amount the subsidy will be offered under Maharashtra textile policy. Basic cost of plant and machine. The cost of solar power. This is the beauty of this scheme. Even solar power up to maximum 4 megawatt is considered as the capital cost of the project. So this is the sustainable, the word Shashwat, the word sustainable investment is because of the solar, and it is inbuilt in the policy that if any entrepreneurs establishes solar power panel on the rooftop or nearby the site of the textile unit, it will be included in basic cost of the capital cost of the project. And the sectors, mega, ultra mega projects and the benefits. What are the definitions? Technical textile, again the same topic. I'm just come to the percentage of benefits. The incentives will be offered in 2 installments. 60% of the eligible amount after 12 months from the date of production, balance 40% within 24 months from the date of commencement of production. Subsector of the textile policy, ginning and pressing, handloom, sericulture, non-conventional yarn, that is fiber and synthetic, spinning sector in cooperative, in private sector, processing sector, traditional textile, power loom, knitting, hosiery and garmenting, wool sector and technical sector. Technical textile sectors. Ginning and pressing, the subsidy will be See, MSME, if it is in zone 1, 45% of the capital cost of the project. Capital cost means cost incurred on acquisition of machinery and solar power. 40% in zone 2, 35% in zone 3, 30% in zone 4. Large scale enterprises, these are the percentage. Mega, ultra mega projects, capital subsidy, 55%, 250 crore. It means if a project which is in mega, if the capital investment in plant and machinery is 460 crore, the promoter will get 250 crore rupees as a cash subsidy. This is a cash subsidy under Maharashtra textile policy, which is 55% of the machinery cost, up to 250 crore rupees. I think so far I have discussed the various state government. None of the state government is offering such a huge amount for mega enterprises in the form of cash subsidy, which is 55% or maximum 250. In zone 1, that is Vidarbha region, and Amravati is having central government Mitra sponsored integrated textile park. So they can take the advantage of this 50% up to 225 crore, 45% up to 200 crore, 40% up to 170 crore. So the additional benefit for SC, ST candidates, power tariff benefit by 2 rupees, high tension line for cooperative sector 3 rupees, low tension line knitting, hosiery, garmenting 3 rupees 77 paisa, 3 rupees 40 paisa is the concession or rate will be offered by the textile sector. This benefit will be up to 2 years. Electricity subsidy. So friends, I think I should adhere to the time, and with this I am not able to cover the Maharashtra textile policy because the slides runs into around 80 to 90, but I should remain stick to the time. And with this, I thanks to all of you for giving me this opportunity and patient listening to me. Thanks to the CPE committee, particularly to the chairman who has visited my office in person a few days before. And during that discussion, we have finalized this course. Over to the head office of the committee.
Thank you so much, sir. There was only one question regarding, can you explain new Maharashtra textile policy little bit in depth? But as you already said that it's a very lengthy 80 page PPT, so it would not, it would be difficult to cover in short span of time. I think there are no many more questions, and straightforward. I'm just concluding with the vote of thanks.
मोदी बोलता है तो बाद में क्वेश्चन नहीं आते.
But sir, you have really rightly and nicely briefed up. So on behalf of CPE Committee of ICAI, I would like to thank you, sir, for sharing valuable, insightful informations, which is really very useful and guiding us on the different practice avenue, unexplored, uncovered, and untapped, as you said. How we can also differentiate ourselves and be partner in nation building. Now, sir has highlighted various schemes, policy of different regions like UP, Telangana, MP, Maharashtra, Gujarat, Odisha, West Bengal, and many more. And also the subsidy part. Now, you have nicely make us understood concept of farm, fiber, fashions, and foreign. So thank you so much once again, sir, for sharing such valuable information and your practical knowledge on it. Thank you so much.
Welcome.
Thank you all the members for joining with us.